Let me quickly talk to you about the top 10 all time best mutual funds for retirement planning. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you are doing as superb as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to have a clarification with you about the top 10 all-time best mutual funds for retirement planning. Investing for retirement is the top goal for most investors, right? So whether you are in the wealth building phase or enjoying current retirement income, there is a mutual fund out there for you, that's for sure. That said, always keep in mind your personal risk tolerance and investment goals when evaluating these retirement funds. So maintaining a diversified portfolio that includes the best mutual funds for retirement will set you up for a golden future. And from leading fund managers such as Vanguard and Fidelity, I'm going to show you today 10 best mutual funds for retirement. So shifting through the mutual funds in your 401k plan can be intimidating. The area of choices dizzying and maybe even paralyzing, right? But it doesn't have to be. Really, it doesn't have to be. We analyze more than 100 mutual funds with the most assets in 401k and other defined contribution plans and rate them buy, sell, or hold, because our goal to guide you toward the best mutual funds likely to be available in your workplace plan. And in the end, the 10 funds that which are describing in this show won our seal of approval. But please, and I want to emphasize here, pay some attention to the fine print. Very important. Some funds are appropriate for aggressive investors, while others are geared toward moderate savers. Also note that we did not weigh in on index funds either, as choosing a good index fund always rests on 3 simple questions. Which index do you want to emulate? How well has the fund done in matching that index? And how much does the fund charge? The cost is pretty important. So evaluating actively managed mutual funds is a different beast, really. In our experience, it's really a different beast. So we look at each fund's long-term returns and year-by-year performance, as well as its volatility and how it fares in difficult market. This is very important. And you want to pay attention to things like manager tenure, the fees, and other factors that we also considered. So it's likely that, here are actually the 10 best mutual funds for 401k retirement savers. It's likely that at least some of these funds are available in your 401k. So please check them out. Number 10, we have here Invesco Developing Markets. Our score, 7.5 over 10. Here is a fund that was started back in 1996. And this successful fund was once known as Oppenheimer Developing Markets. So in 2019, Invesco acquired Oppenheimer Funds, and now the fund is called Invesco Developing Markets. And what we've seen here is that manager Justin Leverance has been at the helm since May 2007. And he actually looks for firms that will benefit from growth trends in emerging markets, and he's willing to pay up for shares if the company has good growth prospects. And we love his approach. His approach has delivered great results over time. For example, since for the 10-year annualized return, we're looking at 4.8%. This annual, and for the 5-year annualized return, we're looking at 12.2%. That's great. Number 9, we have here Dodge & Cox stock. Our score, 8 over 10. And this is one of the oldest funds on our list today. And the fund inception, January 4th, 1965. Yes, you heard that right, 1965. And this is best for investors with long time horizons looking for foreign stock exposure. Okay. And the thing about Dodge & Cox stock pickers is that they're a bit contrarian. So the managers do in-depth analysis to find solid businesses with good growth prospects, but because they like a good bargain, they often go hunting in areas of the market that other investors are avoiding. All right. As a result, some investments can take time to play out, which requires patience on the part of investors. But two additional things have been working against Dodge and Cox International stock, which favors value-priced foreign shares these days. So overseas stocks have lagged U.S. shares, as you can see, especially because of the COVID situation, and value-priced foreign stocks have lagged their growth counterparts for much of the past decades. All right. So one thing I want to see here is that the fund's low expense ratio, which is actually 44% cheaper than the average fee charged by peers, is another plus. And believe me, if you are if you are an investor with a long-term horizon, the fees play an important role. Number 8, we have Vanguard International Growth. Our score 8.5 over 10. And this is a fund that has done pretty well. They actually were created, they were started about 40 years ago. And this is best for foreign stock exposure. In terms of 10-year annualized return, 12.1%, 5-year annualized return, 20%. And like other Vanguard funds with sizable assets, Vanguard International Growth experienced its own version of manager musical chair in the early 2010. And but by May 2016, the fund has slimmed its roster to just 2 managers, and you have Bailey Gifford and Shorters. Those are great managers, and we love the fact that they are basically very diversified. And emerging market stocks make up 18% of the portfolio, so that includes the likes of Tencent and Alibaba, as well as Meituan Dianping, a Chinese shopping platform for domestic products, and Argentine online auction and e-commerce company Mercado Libre. Number 7, we have Fidelity Growth Company. Our score 9 over 10. Here is another firm that was started about 40 years ago, and we love the fact that this is a fund that's great for aggressive investors. And Fidelity Growth Company is one of the best stock mutual funds in the country, hands down. 10-year annualized return, 20%. 5-year annualized return, 26%. 3-year annualized return, 30%. All right. Now, of course, folks, this data is as of April 15, 2021. Just want to clarify that in terms of the date. And we love the fact that, unfortunately for this fund, it has been closed to new investors since 2006. But if your workplace retirement plan offers it, that restriction does not apply to you. Okay, so this is something you have to know. And great firm, great fund rather, and this is best for aggressive investors. Number 6, folks, we have T. Rowe Price Mid Cap Growth. Our score 9 over 10. This is a fund that has been created June 30th, 1992. That's about 30 years now, and it is best for investors in search of a growth fund that doesn't hold Apple, Microsoft, or Facebook. So T. Rowe Price Mid Cap Growth has been closed to new investors for more than a decade. But the cool thing here is that if you have access to it in your workplace retirement savings plan and you are new to the fund, those rules do not apply. Okay, and we're really jealous because we've liked this fund for a long time. And actually, Brian Burgess has run this portfolio of mid-cap stocks since it opened in July 1992. Since then, he has returned to investors 13.7% annualized. Think about it, which actually outpaces the S&P 500 by an average of 2.9% points per year. And as the name suggests, mid-cap growth invests in mid-sized companies, but manager Berkowitz is willing to hold on to them as they grow. So that's pretty cool. And he comes in on firms with market values of roughly $4 billion to $30 billion. Okay, so the top holding, Hologic, is a healthcare company focused on women and which has a market value of just under $19 billion. Number 5, folks, we have Vanguard Explorer. Our score 9.5 over 10. This is another one of the oldest funds in our list today. It was started on December 11th, 1967, and a great fund. Is best for retirement savers looking to diversify their U.S. stock holdings with small and mid-sized companies. Okay, and in terms of a 10-year annualized return, 14%, 5-year annualized return, 18%. We love the fact that the expense ratio is pretty low. Also, you're looking at 0.45%. That's fantastic. The cool thing here is that in recent years, Vanguard Explorer has turned in a better than average performance. In fact, In each of the past 3 full calendar years, from 2018 to 2020, this small and mid-sized company stock fund has outpaced the small company index Russell 2000, the mid-sized company benchmark Russell Midcap, and the typical fund in its Morningstar peer group, which actually invest in small growing firms. And we love that. This is really great. This is a fund that you might be interested in. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a rundown of our top 10 all-time best mutual funds for retirement planning. And we have number 4, we have T. Rowe Price Blue Chip Growth. Our score, 9.5 over 10. And this fund was created on June 30, 1993. Great expense ratio, 0.69%. And this is best for aggressive investors with long-time horizons, unafraid to hold big stakes in tech firms. So the concentration here, the exposure to tech is pretty huge. But great fund. They have had stellar returns. 10-year annualized returns, 17%. 5-year annualized return, 19%, and 3-year annualized return, 20%. Fantastic. We're really big fans of T. Rowe Price Blue Chip Growth, which has been a member of our top 10 mutual funds for retirement planning for a long time. And we love the fact that they diversify, especially when it comes to tech. And because when I'm talking about tech, it doesn't mean just the big tech like the Facebook of the world or the Amazon. They also go with the small chips, the small tech companies and other tech companies, not just in the United States. So we love that. Number 3, folks, we have Harbor Capital Appreciation. Our score, 9.5 over 10. And the fund was created on December 29, 1987. So it's been around for a while now. And this is best for hardy investors looking for rich rewards but have the stomach for a rough ride. Okay, so Harbor actually outsources the day-to-day management of Harbor Capital Appreciation to managers at Jennison Associate. And longtime investors might remember the name of firm founder and rockstar manager Spyro Sig Sagallas, who has behind this fund. Who has been behind this fund since May 1990. It's been a while now, and he has taken on 5 co-managers since the turn of the century, and they work together to build a 55 to 70 stock portfolio of fast-growing, dominant market leaders with above-average revenue growth prospects, healthy financials, and strong pipelines for new products. So this is pretty good. And the cool thing here is that the results are consistently, and I mean it, consistently above average, but so is the fund's volatility. So for the 10-year annualized return, you have 18%. 5-year annualized return, 22%. And 1-year return so far, 54%. And 3-year annualized return, 26%. So we really have some kind of volatility here, but it is worth considering. So if you can handle some turbulence, this fund might be one of the best 401k funds you can buy this year. Number 2, folks, we have American Fund's New Perspective. Our score, 10 over 10. This fund was created on March 13, 1973. It's been around for a while, but pretty solid. And this is best for investors in search of growth across the globe. So if you are internationally inclined with your investment strategy, you want to go for American Fund's New Perspective. And foreign stock funds are scarce among the 100 most popular 401ks fund selections. And American Funds boast 3 of those, and among them you have American Funds New Perspective is its best foreign stock funding offering. So they actually invest in multinational firms with strong growth prospects. I'm talking about the Bayer of the world, the Roche Pharmaceuticals of the world, the big German companies, the big Japanese companies. And the cool thing here is that they actually pay attention to growing companies that generate. They also pay attention to growing companies that generate at least 25% of their revenues abroad and have $3 billion in market value at the time of purchase. Okay, and the managers focus on companies, not countries or regions. Very important. But in the end, more than half of American Funds New Perspectives assets are invested in United States firms. European firms comprise about a quarter of the fund's asset, Asian companies in developed and emerging countries make up roughly 15%. Number one, folks, when it comes to the best mutual funds for retirement planning, Fidelity Blue Chip Growth. Our score 10 over 10, and this fund was created on December 31st, 1987, and it has returned fantastic ROIs over the years. So, for example, 10-year annualized return 19.4%, 5-year annualized return 24.70%, and 3-year annualized return 29.6%. And this is best for aggressively minded investors with long-term time horizons. And Fidelity is chock full of good funds that invest in growing companies. And Fidelity Blue Chip Growth is one of the best, really. Over the past 10 years, they have beaten 95% of their peers, funds that invest in large growing companies with a 19.4 annualized return. That's fantastic. It beats the 13.7% annualized gain in the S&P 500 too. So that's pretty good. And manager Sonu Kalra has been running the show. He's been running the fund since mid 2009, and the whole team focuses on they actually focus on companies with above average earnings growth potential that the market doesn't recognize. Okay. In particular, manager Sonu looks for events that might kick the business into a higher gear, such as new product launch, a change in executives, or a turnaround strategy. All right, folks, this is it for today's conversation. I was giving you a quick rundown of the top 10 all-time best mutual funds for retirement planning. Number one, we have the Fidelity Blue Chip Growth, 10 over 10. Number two, we have the American Funds New Perspective, 10 over 10. Number three, we have Harbor Capital Appreciation, 9.5 over 10. Number four, we have T. Rowe Price Blue Chip Growth, 9.5 over 10. Number five, we have Vanguard Explorer, 9.5 over 10. Number six, we have T. Rowe Price Mid Cap Growth, 9 over 10. Number seven, we have Fidelity Growth Company, 9 over 10. Number 8, we have Vanguard International Growth, 8.5 over 10. Number 9, we have Dodge & Cox Stock, 8 over 10. And number 10, we have Invesco Developing Markets, 7.5 over 10. Thank you so much for your attention. I will see you next time. But until then, remember, stay marvelous.